The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman here. Very sad news we just heard. Eyes are filled with tears. Big lump in my throat. Just found out that Ed Young, one of our hosts, fabulous host, did commodities. Was here for quite a long time at TFNN, and he took a leave of absence, and then he basically resigned because he had ill health. And I'd speak to him periodically, just didn't reach him for the last couple of months. I'd left messages. And I just found out that he passed away. So here at TFNN, it's a sad loss. And we'll miss him a great deal. I mean, besides being an affable, great human being, you can never forget he called a buy on Ford at $1. That's $1. He said IBM would go over 200. Made some fabulous calls, and absolutely prayers and much white light to his family, two great kids, and tough, real tough. So let's get to the market, and we're looking at a Dow that's down 169. A little too many tears in the eyes there. The Dow's down 170 at 50,239. The S&P's down 16 at 1643. The comp index down 36 at 3,451. Gold is up 7 at 1386. Silver's up 9 cents at 22.28. Platinum's down 8 at 14.52. Now this is going to be really important. Copper's down at 3.27. Crude oil is down 40 cents at 94.61. Bonds are only up 1 penny when the Fed says that the Fed indicates that they kind of tired of filling in that slot. You got to be careful, and it doesn't mean to say that bonds have to crash as yields skyrocket, but it does mean to say that the party is basically over. And I'm going to do this. I'm going to look at the dollar because the dollar's down 47 cents. And what I will do is, and this I think is going to be quite important, is I'm going to be looking at the dollar just for a moment because I want to show you in the ChapmanWave technique how viable, how important, how structurally formative it is. And in the ChapmanWave, we look for the lowest low bar. And from that low bar, we just merely want to count at least 4 successively high peaks, possibly going to 5, even 6. Could even get 7. But it's the fourth one that is really the most important. I'm going to spend a lot of time tomorrow in my live workshop here in Newton, Mass. And if you ever, if you are just if you have any money at all in the market and you have some free time for a free workshop, I'm not going to tell you what to do. I'm just going to show you the bigger picture. I'm going to show you that I had a question from a subscriber. Did you say that we will get peak C in the monthly charts of the S&P and the Dow? All I said is if there is a lower high this week, confirms the weekly, and then that high bar, the high of whatever it was last week in the Dow, the S&P, the Qs, if there is a lower high next month, then we have formed peak E or D or whatever it is, and that says in the monthly charts it's leg C going to peak C, and then you will get leg D in my work. But it doesn't say that the peak C can only drop 150 points. It doesn't say the peak C can only drop 1,500. It says it's peak C. You need other technical tools, which I will be explaining to you in great detail tomorrow. Let me go to the front page of TFN. I don't want to lose my track here. As tragic and sad as it is, a young man like Ed Young passing away like this, terrible. I'm going to go right here, and this is, whoops, that's not the one I wanted. That's not the one I wanted. Get rid of that. Right there. Okay. And what we're looking at here, Basil Live Radio Broadcast. Click on that, front page of TFNN. Go to read what it says on Thursday, May the 30th, that's tomorrow. Basil Chapman will do a live broadcast of the Tiger Technicians Hour in Newton, Mass. Come join him for a free live 3-hour event. And then what it says, learn more. And in the learn more section, basically all we're asking you to do, because I need, certainly by the end of the day today, to be able to tell the folks at the Women's Club of Newton Highlands, where we're going to be having the meeting, that there'll be X number of people showing up. It's going to be 72 Columbus Street, Newton Highlands, Mass. 02461. I don't want to encourage you just to show up without signing up. I really do need it, because I need to be able to tell them how many seats there are, extra seats. But it's really important that you register now to reserve your seat. So please do that, and that's Newton Highlands, Mass. 02461. There is parking. There's a lot that has 3-hour parking just around the corner of Lincoln Street. Then you've got 1-hour parking just right around where the venue is, but just off side streets nearby there are longer times. I will be taking some breaks, so you'll have time just to zip out, maybe move your car. It's actually kind of empty around there, but they do have these rules because so many stores are in that Newton, lovely quaint little town, village they call it. One of the 13 villages of Newton, and one of the very well-known ones. So lots of places to eat pizza. You can spend $35 for an entree or $2.50 for a slice of pizza if you want to take a little break and have a bite afterwards or whatever. I decided it's going to be a hot day. It's going to be actually one of our first review hot days. So I'm bringing along water and maybe some cookies and stuff. But I want to be there with you. I don't want to be signing people in, doing all sorts of things. I want to get right to the markets. I'm going to be explaining my CD, introducing the ChapmanWave methodology. Actually, because I did it in San Francisco, it's been so nicely received. I will do the same thing again, and probably we'll have a special. We're organizing that now, but it'll be fun. It'll be a fun event. Most importantly, I'm going to show you what I'm looking at. Let's go right back to the Dow, because how did to the dollar? How did it come about? What we're looking for is thank you. I've had people offering if they can help. Certainly, I'm going to be there. I'm going to be there as close to 9:30 as possible, because I want to set it up. I got the screen, the projector. I want to make sure everything's going to be in place. I went there yesterday to check it out. It's going to be a bit of work just to organize it, get the chairs. The chairs will be set up, but I might want to move them into a certain configuration depending on the light and the screen, and there are shades. So we'll figure it out. So looking at the dollar. The dollar made a low on May the 1st of May, and that low of 81.33 ran up to a peak A, B, C, D, and then an E at 84.50. Let me type that in. 84.50. And that's a peak E. And at this particular point, it says there are patterns that are forming. Yes, you could say, aha, there's that pattern that Basil calls the Chapman Wave stalk leg formation. That's number one. That's a very bullish one, because it says it should break 84.50 and then come back into the body. But you don't know how long that break, the neck part. So this would be the leg all the way up. Single leg, because it's a pattern we're looking at, not counting the waves. Then it gets the body. Then it breaks to the neck. The neck forms a head and the beak comes right back in, can go to or underneath the lowest low, and it'll come back underneath 83.43. If by tomorrow or Friday there's a break, chart is still black. I don't know. Let me just double check here, because I like to have my charts looking just great. So I'm going to do this. Give me 1 second. Being black, I'm not sure why. I'm going to go right to the front page of TFNN. I just want these things to look great. Yes, it is. Oops, get rid of that sound there, so I don't want to hear myself. I never listen to myself. There you are. Okay, so I'm not sure that I'm getting that. I want the charts to be absolutely clear. It's like a little practice for tomorrow. So let me see. Let me just go to this one more time. Charts are down. Okay. I don't know why. I'm going to go stop. I'm going to go back to the white. Oh, I know what happened. That was my fault. Sorry. There it is. All right. I'll explain it. I'll go through it again one more time. There it is. Everything's back. Sorry, folks. What happened is by mistake I clicked on the back, on the frame that we use for our engineers. So, yeah, you can see it. I know you can see it. Now, what you're looking at is the low of May the 1st at 81.33. Ran up in ChapmanWave. You look for the lowest, most obvious left side low bar. I'm going to be going through that a lot tomorrow. There it is. It's a visual thing. And you go peak A, then 1 penny above A, at 82.53 starts leg C. This is called the floating ladder. I'm going to explain that as well. So the floating ladder goes there until there's a peak. That's a lower high bar. The whole bar itself must be lower. Then it goes to C, 1 penny above 83.44. And it goes to peak C and pulls back for another 1 bar. Quick resolutions to the consolidations. Then it runs up, goes to D, pulls back for 2 bars, 3 bars, breaks out. Leg E goes to peak E at 84.50. So that's the pattern I'm looking at. This pattern changes completely and goes to an arch formation. If there's a close of the dollar below 80, what was that? That was a close. 83.60. Close, 83.60? I'm sorry, 83.25. A close below 83.25, that's a sell signal that very quickly gets upgraded to a sell mode. Now the dollar's made this double top, but wait a minute, look at these patterns. This is a beautiful pattern. Look, you see the cup and ladle without cup and handle without a spike to the top, because the moment you start spiking to the top, 84.50 becomes 86.30 becomes the next area, and then 88.71. So this is very important. Why? Because the pattern that we're looking at says that the candle that was made last week in the weekly chart, if there is a close below and the price goes underneath 83.08, you see how all these things are coming together, underneath 83.08 Friday a week, that's on the weekly chart, then all of a sudden the stochastic will go to about 83% or 82%. The MACD will flatten out. So for the technicals of the weekly are still very strong. So that says high-level consolidation, probably between around about 84 and 81, 84, worst case basis, probably 82.42. That's what I'd be looking at. So, and the monthly chart, I can't talk about that until the whole month of May is finished. So far, it's acting quite well. So I wanted to go through that just to show you a basic configuration of the ChapmanWave methodology. Then I want you to look at, we had a caller the other day. I must look around. I haven't seen his name. No, he's not here. I was expecting to hear from him. I think it was Robert in Chicago. If memory serves me right, I always write down the names and what they're called about. I haven't got time to look for it. I will look during the break. But we're looking at Procter & Gamble. My recommendation was right at that moment. That was with that spike, to take something off. I'll be right back. Basil Chapman, Dow's down 150.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman, Tiger Technicians Hour, and the Dow is trying to come back a little bit. It's down 144. S&P's down 16. So I just showed you that the dollar did what we were discussing. Then I had a caller the other day about Procter & Gamble, and I said that the chart pattern I'm looking at is actually not a very positive one. Looking out, it could still turn out to be positive, but nearer term, I didn't like it. It made a peak F. That's the sixth highest peak from the lowest low bar. In this case, look at this. Look at the way these patterns, these letters repeat over and over. From the low of the 15th of November of last year at 65.83, you had ABCD to the top side, pulls back. You had ABC pulls back to, it goes to 70.97 on the 11th of December, pulls back. This is the daily chart. Pulls back to 66.83, runs ABCD to the 30th of January at 75.48. Does what we call in the ChapmanWave an instant restart. That instant restart goes peak A, B, C, D. Again, this is now the 1, 2, this is the third one. It pulls back from 77.76 to 75.56, not too much, 2 points, and it goes peak A, B, C, D, and then it suddenly, with the technicals weakening, but right at that moment they were okay, and it suddenly goes from D to E and F. Now the ChapmanWave song goes, the wave goes to A, and then B, even the anticipated C and D. That's when it flashes a cautionary light, but all you got to do is make your stops real tight. suddenly it goes to E and F. A bell rings so loud it can make you deaf. So what you're going to do, which way to go? You sell at the high and you buy at the low. Well, it plunges from 82.54 down to 76.35. It starts a brand new A, B, C, D. The technicals actually start to deteriorate, and then there's the news about the CEO being recalled, the former CEO, and it spikes from the 78 area to where 82.35. Doji. That's when I got a call from just 2 or 3 days before that. I said to, or just a little bit before that, I'd said to, I believe it was Robert, I would be lightening up a little bit if it went under 77.80. I think it was at the time. It was 78 something. Well, what happened is it spiked higher, and then he called right as it was spiking. And I said, you know what? Think about what you want to do, but I would, if you're asking my opinion, I would take something off. This, I think, is an aberration, and I think it's coming back. But it's gapped down, made an island reversal. That is a very negative after doji high like that, underneath the previous high of 82.74. This is like the pattern that I call the drop bucket pattern, the double top. So I wouldn't be surprised if there's a rectangle forming, and that rectangle says Procter & Gamble is going down to 76.80 to 76.35. That's the low. That's the rectangle formation. If it breaks that low, the next major support will be 75.80. Goes underneath that, and it's the monthly chart. The weekly chart is saying, uh-oh, real problem here, and then the monthly will start to deteriorate. And I've got it as an alternate count, F/B. So we're going to be watching Procter & Gamble very closely. So I needed to get that out, and there are a couple of things that I also want to look at here. One is I heard Steve give a very good analysis. He was looking at the XLP. The XLP is the S&P Select Staples Spider Fund. Was it XLP? Yeah. So if you're looking at this, made a peak D. I'm going to do this right now. I'm just updating it. And now look, here we go. Peak A, peak B, peak C, and where does it go? Peak D. Double top, failure pattern, almost like Procter & Gamble. So maybe Procter & Gamble's part of this. I just don't remember offhand. I've got it somewhere. But I've got this. Now, this is going to be really interesting. Why? Because right here, weekly chart on the 8th of February, the high was 37.67. On the 15th of February, it was 37.69. So what I normally would do in this particular instance, I'd give myself a heads up, and I say, gee, that looks like it could really be a phantom peak. Now, no computer's going to pick up all these details because it just starts to get too complicated, but the eye just picks it up. I'm an artist. I was a visual artist. That just picks it up right away. So I think we've got a leg D, potential peak D, forming. It actually is a peak D already. Let me just double check. So the high was 42.20 and it went to 42.19, missed by 2 cents, making E. So that's what I want to look at. I think that the Spider S&P Select Staples Spider Fund, and I'm just going to put it in here. Let me do a quick check. Select Spider Fund, XLP I have it somewhere, but I don't have it in front of me. I'll put that in. And then I want to look at IBB, which is the NASDAQ Biotech Fund, ETF. And then I want to look at Tesla, and I'll explain why. I'll be right back. Basil Chapman, Tiger Technicians Hour. I'll be back.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at tfnn.com. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of tfnn.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of tfnn.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. This is the Tiger Technicians Hour. My pleasure to be here. And Monday through Friday, 11 o'clock till 12. And tomorrow, we'll be doing this live. Hope everything works out. Should work out. Don't see any reason why not. But we'll be doing it live from Newton, Massachusetts, and there's still time to sign up. And don't forget, we've also got those Tiger Dollars. I mean, go to the front page of TFN. There's so much there going on. Tiger Dollars. I've got my, you get the Tiger Dollars. You also get Tom's free 6-hour webinar coming up. That'll be just worth it by itself. And I'll be doing my show tomorrow. It's a free workshop right here in Newton, Mass. Go to the front page of TF and check it out. Let's go to Freeman in Dallas. Hi, Freeman. How are you?
Pretty good, Basil. Good morning. Basil, I understand. I wasn't listening to the show earlier. I understand in the newsletter you're expecting the market to start turning down or consolidating. Yeah.
Correct.
And I was looking at the charts, and I was looking at the rates. It seems they've been going down for like about 5 days now.
Correct.
And I was trying to catch a bounce on Kim. What do you think? I just put in like about 0.23.
You know what I'm going to make is the suggestion for, in this particular instance, I just want to finish the weekly chart, 1990, 1995, and that goes A, B, C. Just give me 1 second here. So that's going to be 95, huh? So that's going to be 20. That's going to be very interesting. 1 second. I just need to do this. So that's A. You got A, B, and it should be C. So that has to be G. Okay, G/C. Here we go. And then it goes A, B, C, D. There we go. I just wanted to finish the weekly as well because the monthly is very easy to do since it's A, B, C, D, E, and A, B, C, D. Wow, that's very nice. So Kim is what we're looking at. Kimco Realty. This has been on a tear. It's been a really great stock. It's trading at 22.38, down 44 cents right now. It made a right arm extension. This is a fantastic example. Good. I'm going to put it down. Example of right arm extension is KIM to G at that was on the 9th of May, 5/9/13. I'll show that tomorrow in the workshop. Now, what is it's done is it's gone past the left side low bar, which I'm sure you're looking at, 22.38 on the 18th of April, and it's gone below it. And in the arch formation, just like with bonds, I mean the patterns are always the same. And in bonds, what I'm looking at here, in the KIM, the bar that is most important is the one on the 18th at 22.38. Today's low is the first time it's taken that out at 22.18, 20 cents lower. Right now it's trading at 22.40, 2 cents above. This is the bar that has no choice. It has to reverse back up and go to retest some important level, in this case probably the 23.20 to 23.41 level of the 9-period moving average, and then we'll see if it's going to have another extension to the downside. That's kind of the way you'd be looking at it. But the weekly chart is very negative, having last made a peak D, and there was a restart, so I'm just going to put the plus sign right there, and the monthly chart is in leg D, but nothing technically damaging there. The weekly chart says it wants to pull back, and it's not going to stop just yet. It needs either time or price, or time and price. And right now it's got the price from 25 down to 22.20 in a very short period of time, 3 weeks. But overall, with the move that it's had, it's 21.39, the 9-period exponential moving average in the weekly. That is absolutely important. Now, I would say to you, Freeman, you know my rule is to try to identify the trend. If you can get the trend right, you could be wrong by a little bit, but you will be right in the longer term aspect. So my suggestion is not to try to play the bounce, but rather be looking to see a potential H pattern and have this come from the 23.20 to 23.60 area on any very strong bounce over the next week, and then it will be a great short. I think it needs time. I think it needs a little more price, maybe another 1.5, but if you can get it on a pop-up, you got yourself between 9 and 11% if it works out. So my recommendation is don't look at this as a long. It's a very important that you identify. For instance, if I look at the IYR, and I think that's really the key point that you're making here, that the REITs have been very weak. The IYR, which is the iShares Dow Jones US REIT Index, real estate index, mostly commercial properties, made a peak F in the weekly chart, made a leg D in the monthly chart, and it made a peak D. That's not exactly a hat trick top, but it's saying, hey, you better be careful because there's time and price needed to consolidate. And you've got almost an Eiffel Tower look about the weekly chart, which says in the IYR 69.64 right now, down $2. There's a real good chance that the candle of the week of the 1st of March, between 68.46 and 66.99, that's the area of consolidation I'd be looking at. I'm putting Kimco in the same category. I'd prefer you to be looking at the short side, because let's just say you're correct. Your timing has to be impeccable to get out at exactly the right time, certainly if you want to get out and then go short. So I'd rather have the mentality say, wait, the tide has changed. The tide will probably save me if I'm a little early. But if I'm wrong about going long in a bear phase, even if it's a weekly bear phase and not a monthly bear phase, then certainly a daily bear phase, because there's no question that it's dropped 10% in a very short period of time, then what I'd be looking at is not to play the bounce, because that's going against the tide. You know, in my seed introducing the ChapmanWave methodology, there's a chart. I wonder if I can just find it real quickly. It is so beautiful to look at. Let me see. I was scrolling through here quickly. I don't know if I'm going to be able to get it. Oh, there it is. Great. So here's the chart. If you're looking at Tiger TV, folks, look at this chart. It says identify the trend and then trade with the trend. This is slide 64 of 476 slides. So you've got this General Motors way back when it was up in the 50s. So it's rallying sharply. And I've put this arrow, and the arrow shows down. It says shorting all the way up. Uh-oh, wrong trend. Well, you could have got every one of those dips, but look how quickly you had to cover. Now look at the way down. If you were if you were buying all the way down, it was the exact opposite. This is the chart that you want to be looking at. The same thing, but with the trend going up with the fast-moving average of the MACD and the trend going down with the fast-moving of the moving average convergence divergence underneath. That would be the correct way to trade. So I'm saying to you, I prefer that you don't try for the long side here, because the timing, first of all, has to be perfect. You have to say that this is the low and it's going to bounce, number one. The 120 minutes probably says, yeah, it's close. Yeah, it says it's close, but it doesn't say, oh, look, the Roman candle of the 120-minute chart says even if it bounces, if Kimco gets into the 24.29 area, 22.29, it's probably going to retest 22.18. So I'm going to just say to you, try to avoid going against the trend. Rather have a little patience. You can even short it on any bounce with a small position, planning to add another position around about 23.40 with a stop at about 23.80. Now, there you're not looking at a 1-to-1 potential gain. You're looking at a 1 to 1.5 or better gain. So that to me is a much better risk reward. So I hope that helps you.
It does help, Basil. Thanks very much.
And thank you so much for calling. So, folks, let's just do this. What I want you to do is go to the IBB. I just wanted to show you how sectors that have been absolutely on a tear are starting to show some weakness. Now, IBB is trading down $1.75 at 181.22. It hasn't said yet that it's broken the up channel key support, but it's testing it a lot. And the weekly chart says that the long doji candle of last week says that you can't expect much more than the low of 174.89 to be tested. It's about another 174. Actually, it's another 7 points down. And 174.68 is, in fact, the 9-period moving average. And then you might want to try to rally back up, because the monthly chart is still weak. But I would say there's a real good chance that we're looking at the best of the best, and that's the biotechs, one by one, slowly to show signs of weakness. So I'm looking at it and I'm saying, okay, let's identify what might be weak. Let's identify what might be strong. So we have, in my opening call, we have two cyclical stocks that are actually holding quite well. If they can hold through the next 2-3 days, that'll say, great. Now they're showing good relative strength. Right now it's just a test case. We'll see if it's going to work out. But that's the way I want to go through the next phase. And tomorrow in my live workshop, I'll be going to Newton, Massachusetts. I'll be going through a whole bunch of these things. And the time that we have 3 hours. So I'll be able to do a lot. So now, yes, the other thing I want to look at. Tesla Motors. If you look at the book value right now, I suspect that in terms of costs, that each car is quite a good deal underwater. They're getting bonuses with government subsidies and different things because of the nature of the vehicle. What I'd say to subscribers is, I was very upset because I identified this on the way down. I said, hey, Tesla's going to be, it's the sexy stock. You want to play these things for real nice gains whenever you can. So what happened was it went to the 9-period moving average, TSLA. It holds 83.05, and then it doesn't even give you a chance to get in. It just gaps up. And then what I wanted to do today, I was looking to either short it or to buy a put. The puts were very expensive. And I felt we're going for shorts in other areas right now. I didn't want to play games. I still see some internal strength in the market, even though I think we're starting some kind of we've started some kind of consolidation. We started it last week. So I didn't want to mess around, but look at this. It popped up to 114.90, and then it collapsed on the same day to 99. That's a pretty big move. That's the biggest move it's had, either up or down, for a long time, since it made that peak C at 97.12 on the 14th. It says to me, Tesla's getting ready for a consolidation, and the consolidation should take it down to the 88.62 support over the coming 10 days or so. We'll see. And the weekly chart, I got a G/C. Monthly chart is leg D. Talking about that, we've got Fannie Mae, FNMA. That's some fantastic trades in the den. Folks did oh my God, what a beautiful job. We had one person get out yesterday at 4.80, I think, and someone today got out at 5. That was his target. Got out at 5. It went to $5.44. Where's it trading now? Down 36% from yesterday. That's not 30. It's actually down 50% from today's high. It hit a low just a short while ago of $2.25. Unbelievable. Now, and thanks to the den, it's a wonderful medium we have. The den, we constantly have people updating us with information. Someone said that the short level on Tesla was up in the 40% area. Now it's the 20s, and that's what happens with short squeezes. You just don't want to be in the wrong ballpark when there's a short squeeze. Now I got a moment. A question on the Dow, INDU from the den. Now this is what I wanted to talk about, and I'm going to spend a lot of time on a couple of these charts tomorrow because time is what we will have. I can take your questions, but I'll do my best right now. In the Dow Daily, there's a beautiful up channel, and this up channel actually it starts from the doji high of the 9th of November at 12,890, and that trend line goes all the way through. I can't make it. Well, I'll make it bigger right now. Look at that. All the way through. And then within it, in the ChapmanWave, there's something that I call the inside track. Let me just show you what you do. You go edit, find, you type in inside track, and lo and behold, it finds inside track, and it talks about, there it is. See that inside, see that I got it here as dashed lines? So it's a channel within it 2 parallel lines. I'm going to show how you can use trend lines tomorrow. And what happens is, in that inside track, it gives you the ping pong ball bouncing on the way up and then on the way down. In this particular instance, the Dow has been bouncing on the way up, and everything about the MACD and the stochastic and the relative strength says be careful. But my one indicator that I use in a different way to the way it was actually developed, and that is the unbalanced volume. Granville has used it since the 1950s. I love it as a single line formula that works for me. And what happens is, it said that there was still some internal strength, and that was that strength we saw yesterday in the spike. Now it's saying, I'm going along sideways. I'm using up time in this channel. There is a cup formation. If the Dow closes underneath 15,170, it says, be careful. I'm going to test the up channel trend line. And that comes in. It's a rising trend line. So at this particular point, by tomorrow, it'll be at 15,105. My target is actually a test of the 15,000 area at some point fairly soon. And that's going to be key. That's number one. Number two, I hear the music. How does this fail? It fails when you make a new recovery high. But a recovery high won't be good enough because it's the trend line, that green line. That's called the inside track sell zone between the green and the maroon. And at the bottom, it's the buy zone. Or repellent and propellant zones. If it snaps through and goes to 15,630 in the next week, wow. I'll be back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at tfnn.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Dow's down 128. Trying to get back. As I say, there's rotational strength there, but I believe we've started a process where we should be making lower highs and lower lows. I'm not yet convinced that we're looking at a huge percentage down. I'm saying as of yet. I have to wait for Friday's close to see the weekly chart, because in the weekly Dow, we have made a top, if there is at least a peak D top. A peak D. I'm using the phantom peak in the ChapmanWave. I don't want to go through that again and discuss it a little earlier in one of the other charts that we're looking at. But I believe that we can't call this a leg D going to a peak D. That's number one. Number two, the doji from last week, if there's an inside doji, it means one thing. If there's a candle by Friday that closes about 15,542, it means another. There's a candle that closes underneath, whoops, if it closes underneath 15,180.23, even by 1 penny, the low of last week, it means another. It actually means that we're probably going to test the 15,100 to 14,900 area. And fairly soon, I need to see the MACD and stochastic really turn down from 94% in the stochastic and the MACD. I need to see them turn down significantly. We have positioned ourselves, again, in my opening call. We still have our longs. Can't believe it. One of the longs that we've had actually tried to make an even higher high today. But that's because it's just been a powerful stock for a very long time, since November. That's not the issue. The issue is that I'm looking to see which of the stocks have had foolers. What I mean by fooler was yesterday was a fooler. It's where everyone, that was that final thing he did. It happened last week, and then the market pulled back with Bernanke, and then the market pulled back, and then all of a sudden we got the same news yesterday. Yesterday to me was where just the final bears who had some flexibility. There are some bears that will never do anything, but I'm talking about the bears that they finally threw their hands up and said, "Oh my God, I'm getting out of my longer term fixed income holds. I'm taking some money and I'm putting it into stocks." That's what it felt like, and I knew it felt like that because I myself said, "Wow." If I had only kept our DDM, which is 200% long, that we sold at 96, I think, 93.60 something. No, I can't remember offhand. DDM, I'll tell you right now. DDM. All right, well, we had it for a while and made a really nice profit, about 40% because it's 200% long. And then we got out and we tried shorting, and yesterday we got just barely taken out. Then it turned around. We're back in that position. It's only a half position, but I've got a plan here that says, somehow or other, the upside appears to be limited. So let me leave you with this. So before we go, today's Wednesday, we've got Larry Pesavento back. That's going to be great. Larry, and then we got Larry, Dennis, Dave, and then Tom O'Brien wraps it up 4 o'clock to 6. Let me just do this real quickly. So what I'm looking at here is that in the Dow, we've got those parameters that I was looking at on a weekly basis. But shorter term, it's how the GEs, you see, let me just run this. I think we've got time. Look, my 4 Dow horsemen. GE made a peak D, is pulling back. Weekly says, hey, it could be an E, got to be careful here. 2311 will be key support. You got IBM. Well, IBM made a peak the other day, peak E in the daily chart, pulling back. But so far, it's just kind of a consolidation. We've got to call it a consolidation. And that says, okay, watch out, because if IBM takes out 203, it's at 207 right now, that's going to be a big negative. Goes on the upside to 212. Hey, that's very good. Triple M has been the strongest. I waited for leg D. We got that yesterday. Hey, but this could turn out to be an oval formation. So you can see that we're looking at these individually and as a collective, and UTX, which is... yeah, and UTX made PT. I believe we're in a consolidation right now. We'll know a lot more about it in the next 2 days. Stay tuned for Larry. And don't forget, go to the front page of TFNN. Sign up for my live workshop tomorrow, 3 hours here in Newton, Massachusetts. Looking forward to seeing you. Daryl Martin will be on after Larry. Thanks for being here.